briefing on CREATE, Corporate Recovery and Tax Incentives for Enterprise Act. To start off, we would like to begin with our invocation.
Lord, thank you for this day, for the presence of everyone in this call. For once again, we are gathered and given the opportunity to appreciate life and your words. Forgive us for our shortcomings and cleanse our hearts as we learn and live your words and example. Father, bless our endeavors, especially today's meeting. May you guide us in our discussions, and may you enlighten our minds in every decision that we make. Give us your grace that we may effectively do our parts for your greater glory. All this we ask in Jesus' name. Amen.
Okay, before we proceed, we would like to share with you the house rules for this session. First is please use your company name and then your name on Zoom. Keep your mic and video off. Set your views to speaker view. You can use the raise hand or chat box for questions and answer. Stay present, and just to let everybody know, the call is being recorded. And our agenda for today is we have one presenter and two sponsors. And before we proceed, we would like to acknowledge our sponsors for this session. Bruja Panels, the panels that connect. They are a high-end manufacturer offering a comprehensive range of services, both as a supplier of panels and insulating panels, and as an assembly specialist in cold storage construction. And we also have Aboitiz Power. Aboitiz Power is the holding company for the Aboitiz Group's investment in power generation, distribution, and retail electricity services. And they believe in balance. So to start off this session, may we call on the Cold Chain Association of the Philippines President, Mr. Anthony Dizon, for the opening remarks.
Good morning. It feels so refreshing to see so many familiar faces of good friends again, even if only virtually. I trust that all of you have been keeping safe and that life has been as close to normal despite the unprecedented circumstances we have gone through over the past 15 months or so. I am also thankful that our industry has survived the challenges brought about by the pandemic and join everybody in the hope that we shall be well equipped to face the next normal. Expectantly, therefore, we look forward and anticipate that government will formulate and implement policies that could help businesses reestablish their footing and recover lost ground in the after pandemic. It is for this purpose that we have invited our friends from SGV to provide us the enlightenment to better appreciate the prospective benefits of the CREATE law, particularly on how this may improve the investment climate in our industry as we strive to pursue our advocacy and our commitment to the Filipino consumers. And I am honored that they have graciously accepted our invitation. I look forward to an active and productive discussion. Good morning, everybody.
Thank you, Mr. Dizon, for the opening remarks. To start off the session, we would like to call on our first presenter from Bruja Panos. Okay. Our presenter, Ms. Sinyi Wong, is the Regional Sales Manager for Southeast Asia. And though bred in Singapore, Sinyi considers herself a true blue Malaysian Chinese with deep roots in her home country. She graduated from RMIT University with a bachelor's degree in business from SIM and a diploma in intelligent building technology engineering from Temasek Polytechnic. She has more than 16 years of working experience under her belt with more than 12 years in the construction industry. She hopes to one day to be able to visit the pristine white beaches and waters of the Philippine Islands. So I'd like to introduce to you again Ms. Sinyi Wong for Bruja Panos.
Oh, okay. Hello, everybody. Good morning. I'm Simi from Buha. Let me start off my presentation from here. I think everybody can hear me, right? Okay, so wait. Need to share. Sorry, just let me share my screen with you. Can everybody see my screen? Yes, no?
Yep.
Yes, okay, all right.
We can see the screen.
All right, just let me start off. I'm Sini from Buha. Okay, so today I'm going to introduce my company Buha, what we do and what we can offer for you to further enhance your business. Okay, so Buha is actually Buha is from Austria, Europe, not Australia, okay, Austria. And we are a family-owned company, which counts over 750 employees worldwide. And what we do is we manufacture specialized and standard insulated panels for building envelope as well as for controlled environment solutions for different building applications. All right. Now, what
Saan
you
na
see
nakagamit
over
ani sa inyo ha? Ano nimo? Ayun to.
right. So this is our manufacturing facility, and it's about more than 80,000 square meters and expanding. Is somebody controlling my? Right. Okay. So this is okay. In Buha we have three main core business. Number one, of course, is our insulated panels for roof and wall. We call it building envelope. The focus of today is, of course, on our engineering support and supervised assembly of controlled environment solutions such as cold room, high-rise warehouses. And our third core business is, of course, our walk-in and doors. Okay, so as I mentioned earlier on, one of our field of activity, what we are focusing on today is controlled environment solutions. One aspect is, of course, cold room applications. All right, in Asia, we actually offer consulting, planning, production, and supervised installation. And our customers in Philippines will benefit from 70 years of knowledge in planning and in planning cold storage solutions. Okay, another aspect is high bay warehouse, more for storage capacity with maximum height structure. Another aspect that we also can offer you is special construction, such as that is tailored solutions for your requirements or for your cold room. For example, cool smoking rooms and special designs upon request. All right, so I'm moving on to my product portfolio. Okay, so as you see here, we actually do provide two types of product. One is for wall, or what we call facade, and the other is for roof. And for these two applications, we do have it in wall roof or in foam panels. Okay, but for our presentation today, we will only introduce the highlighted product, which is this Pure Plus wall. We call it WP, which is the main product for cold room applications. Okay, so what you see here is actually our panel, what we call WP panels. Okay, and it's actually an open fixed panel. Okay, and when you receive our data sheet, what you see is actually, you can see the different thicknesses. Okay, you can see the U value of the different thicknesses, the weight, and etc. Okay, now just some of the some of the properties of our panels. For example, exterior steel sheet. You're looking at a steel thickness of 0.6 mm with a 25 polyester coating. Interior steel sheet is normally 0.5 mm thick. Okay, we can have a higher or lower metal gauge to your request, and with a 25 polyester coating also on the interior. Now, the good thing about our insulation core is our foam is called Pure Plus. It's a better foam system, and with a very good thermal conductivity of 0.019 W per MK. Okay, and the fire behavior of our panels is type B, smoke density of 1, and with 0 droplets. Wow. Okay, now a close-up view of our panels. What you can see here is, this is also a unique selling point of our Buha panels. You can see the cover tape here, which is actually factory applied for optimal moisture and protection. And you can see the sealing tapes here. Okay, and this is the actual view of our panels. Okay, I actually took this photo just to show you the cover tapes and the sealing tapes. Okay, now all Buha products are internationally certified, such as FM, United Leaps, BREEAM, you name it, we have it. All right. Now, another thing that I would like to show you is what Buha has is we have a surface solution called solid board, which is more for sanitary facilities such as dairy mill, healthcare, clean rooms. And something that I would like to add on is it can be manufactured as part of the panel, or it can be pasted on existing panels as a refurbishment. And one thing I would like to add is it is extremely robust because it is glass fiber reinforced. Okay, so I'm moving on to another core business that we have, what we call our doors. Okay, now you can see here that we have hinge doors, we have sliding doors, and for both types of doors, they are available for normal operations or for chillers or freezers. And the most important thing is all our doors are fire rated up to EI 90 minutes. That means we are only, actually, from what I understand, one of the only manufacturer who is able to offer fire rated doors. Okay, and it can be manually operated, automatic operated, and available in all kinds of coatings such as stainless steel, standard color coating system, different sizes and dimensions tailored to your needs. All right. Okay, another thing that is very special is all the doors that we supply for your projects has a unique link that is actually links back to a specific order. Okay, this is for traceability purposes, so that if one day you may need to want to buy extra spare parts or for repair, we are able to trace back what kind of doors that you have purchased. Okay, just to show you a picture of a sliding door, hinge doors, and I'm very proud to say that our Bruhau doors are only one of the only few who achieve this green outstanding certification. And those who achieve this has only 1% of all the buildings in the world has been awarded this outstanding certification. Okay, this is just to show you a sliding door with a PVC swing door as a barrier, as you have seen over here. All right, and you can see that this is actually a solid block plate that is adhered to an existing WP panel for refurbishment. Okay, another customized door solution that we can do is for food processing industry is there is no standing water after cleaning. We can do this type of detailing for you. Okay, we can also do door with integrated conveyor rail opening for meat processing industry. Some of the special constructions that we are able to provide, for example, stainless steel impact protections, okay, galvanized steel, stainless steel fender baseboards, PVC protection stripes, and glazing with different frame solutions if you ever need it. Okay, now I'm moving on to another core business that we are doing, what we call evolution walk-in. Okay, now this walk-in can be used as a like a large refrigerator, like a chiller or a freezer, available in different sizes, available for your needs. Of course, there is only up to a certain dimension. You just tell us the dimension that you need, we send the panels to you, and you can even install it yourself. I have installed it myself in Austria. It's just like a click and lock system. All right, and it's a full solution together with your ceiling, with the floor, with the locks, etc. Okay, so now just to show you a few references that we have in Wuhan. Now this is actually Nestle in Russia. Okay, it's actually a special deep freezer solution together with floor insulation, and we actually provided supervisor for this job. And this is Edeka Meat in Germany, also another meat processing plant. All right, and for, like I said, in Europe, we actually provide the full service. That means it's supply and install, and we pretty much done the whole building for this Edeka Meat in Germany. Okay, an aerial view of the entire building. And this is Verdonova in Switzerland. It's the same arrangement. We actually did a supply install of the entire building. Okay, and this is actually an oxy-reduct deep freezer. Okay, in a rack and clap solution. Okay, La Lorraine in Czechia. Okay, what we actually supplied here is actually for a bakery good oxy-reduct deep freezer Now, what is very interesting is La Lorena, I think, was built in 8 years ago, I think 7 years ago, and it's one of the first oxy-reduct building that we have done. Look at the building dimension. It's 120 meters long, 34 meters wide, and 39 meters high. And we are able to build with this kind of quality. Okay, an aerial view of the building. Now, this is something I think that you guys will be very familiar with, is Euro Swiss in Manila. All right, they are a producer of Swiss German hot dogs, bacons, and etc. Now, what we did for this building is actually, we actually supplied for the walls with doors and Buha supervisors. Okay. Now, these are the double hinge PVC door and stainless steel panels, WP panels, with windows, fender protection fenders. Okay, people at work here, sliding door, WP panels, deep freezers. Okay, another thing that we have done, another project we have done in Philippines is this Big Blue 6 logistic. Okay, and we actually did a deep freezer for this -25 degrees. Okay, just to show you the inside. And we are very proud to say after 3 years in operation, externally still in very good condition. You can see the quality of our panels. This is after 3 years in operation. Internally, no icing, in perfect condition as it should be. And currently, we are supplying for Big Blue number 7, the ASRS building, red clad solution. Okay, moving on, just to show, as with most building, wall panel can be used as a ceiling. And we are very proud to say, like, in the most box-to-box solution, we do build ceiling, and we are very proud to say that our panel is able to span 12 meters with a T-real fixation every 12 meters and a point suspension every 6 meters. Okay, and you can see it can take a very high load. These are Angmos or the Caucasians standing there. Okay, take on top of our panels. Okay. Now, just to show you how we actually do installation in Europe, this is actually what we call an octopus and a vacuum lifter. Okay, this panel is 17 meters long. All right, so it lifted the panels. Okay, move it towards the wall here. This is actually an internal cold storage in Austria. Okay, so what you see is we only have a support on the top and on the bottom, and it just moves the panel towards the gap. And the whole thing was done pretty fast. Okay, we only have 2 guys on the top, 2 guys on the bottom, 1 guy operating the octopus, and you're done. So just to finalize, okay, this is Eurostar in Austria. Okay, and it is actually a 15-year-old smokehouse using WP stainless steel panels. And you can see after 15 years, the stainless steel panels are still in very, very good condition. Okay, so using quality, the panels last a very long time. And yeah, just to tease you a little bit, smoke pork bellies before I let you go. These are the customers that we have worked with internationally and in Philippines. And thank you very much. If you ever need to contact, I will send this in a PDF to you guys so that you can contact us anytime you have any queries. Thank you.
Thank you very much, Ms. Sinyi Wong. And with 2 projects in Cebu, I think you are missing a lot by not being able to visit the Philippines, because Cebu is one of those places that have actually. Okay, and since 2002, the Cold Chain Association of the Philippines has always had its annual conference every June. But the past 2 years have not been too kind with the pandemic in place. However, we remain in high spirits and hope that by next year, 2022, we can already have a conference maybe in a different format. So if any of the members, guests, presenters, and friends have any proposals for a conference format for next year, we are open to suggestions and recommendations. So you can share, you can give your suggestions through the chat panel, or maybe you can send an email to the Cold Chain Association of the Philippines email address or website. Okay, moving forward, Our speaker for our main speaker for this afternoon is Miss Cheryl Ong of SGV. Attorney Cheryl Ong is Philippine champion for quantitative services, which is geared towards helping investors maximize fiscal incentives. Further, she is a private client services and business tax services partner of SGV and Company. She has been assisting multinational clients for over 12 years in providing business tax advisory services to companies in manufacturing, logistics, real estate, BPO, hospitality, power and service oriented industries. Her competencies also include assistance in handling tax audits, corporate restructuring, and corporate registrations with government agencies. Cheryl graduated from the University of San Carlos with a Bachelor of Science degree in accountancy, magna cum laude. She completed her Bachelor of Laws cum laude from the University of Cebu. She was recently elected as one of the board of directors of PICPA Cebu and is a regular speaker on tax updates with the Integrated Bar of the Philippines and various business chambers. She holds a certification in Executive Development Program from the Wharton School of Business. Ladies and gentlemen, our speaker for this morning, Attorney Cheryl Edeline Ong.
Good morning. Thank you, Mark, for that generous introduction. Good morning, everyone, and I hope everybody is by now very much used to this webinars. I suppose most of you have also attended similar webinars in the past. But this morning, I'd like to thank Cold Chain Association of the Philippines, especially Sir Tony, for this opportunity to talk to the players in the industry. And the agenda or the topics that I will be discussing this morning would basically focus on the incentives under the CREATE Act and more particularly geared towards the players of the industry. Also, as requested by Sir Tony, at the last part on the proposed amendments to the Public Service Act, which may also affect the players in the industry. Okay, so let's proceed. Next slide, please. Right, so CREATE has finally been created. We have been waiting for this for a long time. And to quote the Department of Finance, this hopefully ends uncertainty among the investors. And it also, according to the DOF, it strongly projects that the Philippines is back in the game. According to Congressman Salceda, to quote him, the purpose of CREATE, among others, would be to codify the tax incentives into a single menu of incentives that would be indifferent as to the investment promotion agency where you are registered. Now, CREATE investments up to 200 billion pesos and create jobs of up to 2 million in 10 years. So we'll see how it goes. No? But I do understand later on in the discussion, you will note that there are still some gray areas which we hope will be clarified soon by the Department of Finance. All right, so let's backtrack a little bit in terms of history. So these are the tax reform packages of the Department of Finance in this administration. So you will remember that the first package was called the TRAIN Law, or the Tax Reform for Acceleration and Inclusion Act, which became effective last January 1, 2018. Now, CREATE is actually package 2. So this was effective last April 11, 2021. And this is the meat of our discussion for today. There are still two upcoming tax reform packages. We're not sure if it will still be passed within this administration, but just for information, there is the uniform valuation for real property, no? Because right now we have the zonal value and then we have the values by the local governments, which we know would have a big disparity. No? Then there is package 4 on the Passive Income and Financial Intermediary Taxation Act, or the PFITA, which is also pending in Congress. There is also a fifth one, which they attempted to add. It's called the regulations. So it's also pending. All right, so we will discuss on package 2, which is the create law. Next slide. Next slide, please. So in terms of timeline, or next slide, please, to be passed. But the most important date to remember is just that the effectivity of create was last
Attorney Cheryl, I think we lost Attorney Cheryl, but we are trying to get her back for her presentation.
Hello. Sorry
There.
about that. I was lost for a bit.
Okay.
Okay, I thought someone was messing with me. Can you hear me now?
Yes, yes. Well, we can hear you loud and clear, Attorney Cheryl.
All right. Okay. Sorry about that. This happens to all of us. All right. So where was I? We are in the objectives of create, no? So the law itself discusses or enumerates the objectives of the create law, no? I'm not seeing the slides, Aura, or is it just me? Mark, can you see the slides?
No, Attorney Cheryl, we do not have, we cannot see the slides.
Okay. Give me 1 second. Aura, okay, there. I think
There.
I see it now.
Okay. Yes.
Okay. Slideshow, please, and objectives. Okay, there. There you go. All right. So first is to improve the equity and efficiency of the corporate tax system. So we will discuss later on how the corporate income tax rate is reduced. No, and then I think among these, no, would be the second objective would be most relevant insofar as the incentives are concerned. So one of the objectives is to develop a more responsive and globally competitive tax incentives regime that is performance based, targeted, time bound, and transparent. So we will see later on how these objectives are supposedly met with the provisions that we will discuss later. Okay, next slide, please. So there are basically two parts of the CREATE law. The first part talks about the adjustments in corporate tax and other taxes, which means that these revisions in the law would affect all corporate taxpayers, even those not availing of incentives. Now, the second part talks about the rationalization of fiscal incentives, and these would affect only those that would avail of incentives. Now, so as mentioned earlier, the the focus of this morning's discussion would basically be on the second part, but although we will discuss some salient items on the first part. Next slide, please. Okay. Okay. So the most important change would be on the change in the corporate income tax rate. But I think by now, most of you are already familiar with this because this became effective already July 1, 2020. And most of you have already filed your income tax return last April 15. No? So basically, in terms of corporate income tax rate, the rate is now reduced from the 30% to 25% effective July 1, 2020, except for the so-called small and medium enterprises where their total assets would be 100 million and below, and the taxable income would be 5 million and below. They can avail of the corporate income tax rate lower, which is 20%. And then to help businesses recover from the impact of the pandemic, the minimum corporate income tax is temporarily reduced from 2% to 1% for 3 years, effective July 1, 2020 until June 30, 2023. So this means that after June 30, 2023, the minimum corporate income tax will go back to 2%. Now, when is the minimum corporate income tax applicable? This is applicable when, for example, you are in a net loss position, but you have gross profit, no, or gross income, because the minimum corporate income tax is based on gross income. The definition of corporation also now includes a one-person corporation. So if you have an OPC or one-person corporation, these corporate income tax rates will apply instead of the income tax rates for individual taxpayers. Next slide, please. Okay, another salient provision that's applicable to all corporate taxpayers would be the repeal or the removal of the improperly accumulated earnings tax. Now, this is good news for most companies because uh, um, especially for foreign investors, because it's quite ironic why we would force investors to take their money out of the Philippines. So this encourages investors to reinvest their profits in the Philippines for maybe working capital or expansion purposes. Now, the improperly accumulated earnings tax was previously imposed as a penalty tax if you retain your retained earnings more than your capital stock. No? So the effectivity of the repeal, as indicated in the implementing regulations, is prospective. So it will cover the entire taxable year for all fiscal or taxable years ending after April 11, 2021. So take note, however, that if you have any excess retained earnings for your 2020 year end, for example, you still have to deal with that excess either through declaration of dividends or appropriation of retained earnings. No? Okay, next slide. Okay, so another feature that would be applicable to all corporate taxpayers, regardless of with or without incentives, is this additional training deduction of 50%. So when you say additional 50% deduction, that means that you can deduct 150% of the labor training expenses for skills development of enterprise-based trainees enrolled in public senior high, public higher educational, or public technical and vocational institutions. Now, there are conditions to avail of this additional deduction in the next slide. So the deduction, additional 50%, should not exceed 10% of your direct labor wage. It should be um, also certified, no, by the Department of Education, TESDA or CHED, and there should be an apprenticeship agreement. So this is to encourage private companies to hire interns or apprentices, no, to be able to provide skills development training to our students. So I think this is also similar to other countries, and this will make us more competitive in terms of having more skilled labor. Now, to reiterate, this additional 50% training expense deduction is applicable even if you are not registered with any investment promotion agency. All right, next slide, please. Okay, so I decided to limit my discussion in the first part to those three salient provisions that which I think would be more applicable to the players in the industry. Now, there are other in other amendments, no, to the tax code under the first part. Do feel free to reach out if you would like to know more about that. Okay, because as promised, I will be focusing on this second part. So the second part talks about rationalization of fiscal incentives. Now, the agenda or the outline of the discussion, we have arranged this as follows. No, we will talk first about the general policies, and then we will talk about new investments or projects, who will qualify for incentives, what are the qualified activities, who approves the registration, and what are the tax incentives available. And then after that, we will talk about existing registered activities insofar as their sunset or transitory provisions. And then we will talk about post-reportorial obligations of registered enterprises. And if we have time, the veto message of the president on some items originally in the bill. Okay, next slide, please. So first on general policies, no. So in the Philippines, we have right now about 14 investment promotion agencies, which you see here on the screen. This includes the Board of Investments (BOI), the PEZA or the Philippine Economic Zone Authority, SUBIC, Clark, and so on. No? So each of these 14 IPAs, they have their own special law or charter. And prior to create, they have their own menu of incentives. No? And they also have their own rules and regulations. Now, one of the purposes of this law, as I mentioned earlier, is to come up with a uniform menu of incentives so that the investors would not be confused. Okay, so the good news, however, is that in the law, in the CREATE law, it does not seek to dissolve these IPAs. So it specifically or explicitly provides that these IPAs will maintain their functions and powers under their charter unless specifically repealed by CREATE, which we will discuss in a bit. No? Now, the only difference is that these IPAs will now be under the oversight function of the FIRB or the Fiscal Incentives Review Board. No? And then on top of that, these IPAs will also establish a one-stop shop to facilitate and expedite conduct of registered projects, including assistance in coordinating with local government units, because we understand that the investors usually try to avoid dealing with the local government. Even after the expiration of incentives, these one-stop shop centers will still be there as the so-called aftercare services, no? Or after investment services. Okay, next slide. Now, who will qualify for tax incentives? So the law defines the two types of enterprises that will qualify. Of course, we have the export enterprises, which is defined as those who would export directly and indirectly at least 70% of their total annual production or services. And the second type would be the domestic enterprise. Now, as to domestic enterprise, this does not mean that all domestic enterprises would qualify, no? Which leads us to our next topic later on what would be the qualified activities. Okay. There are also, the law also provides for general qualifications for a registered business enterprise to avail of tax incentives. So the very first or the most important qualification would be that you should be engaged in a project or activity included in the Strategic Investment Priorities Plan or the SIPP. Okay, we have separate slides on SIPP later on, but basically, this is a list of priority activities that would qualify for incentives to be released by the Board of Investments every 3 years. Okay, and then second, you should be able to meet performance metrics to be indicated in your registration document. So performance metrics usually include your committed amount of investment, for example, the projected number of jobs or employment that that you would generate as a result of your investment, or maybe the technology or the know-how transfer that is expected from your investment. Third is that you should install an adequate accounting system so that if you are, especially if you are engaged in both registered and unregistered activities, such that your profit and loss statement, no, you should be able to segregate your profit and loss from registered and unregistered activities. And then you should comply with e-receipting and e-sales requirement. Now, if you recall, under train law, the BIR is given 5 years from 2018 to implement this e-receipting system. So this is expected to be implemented by next year, 2022. And then, of course, you have to submit annual reports of beneficial ownership. This is your general information sheet and related parties in relation to compliance with transfer pricing documentation. Now, if you look at all these, you might say that for a registered business enterprise to qualify for tax incentives, in other words, you have to be a good tax citizen, right? Next slide, please. Now, what are the qualified activities? Okay. So the law itself provides for the so-called industry prioritization tiers or industry tiers. No, there are three: tier 1, 2, and 3. And if you look at the description, it's quite generic. No, initially the bill attempted to provide more specific activities in these industry tiers, but those specific activities were vetoed or removed by the president, saying that they would like the law to be as general and as flexible as possible to be able to keep up with the changing times. Now, if you look at this, I have highlighted in green the description, which I think you may fall under, no, in your industry, which is to provide essential support for sectors that are critical to industrial development. Now, if you look at this tier 1, 2, 3, there is also tier 3 if you are involved in research and development or something that is high tech or highly technical, high technology, and so on. Okay, next slide. Okay, so as I mentioned, the Board of Investments, together with the FIRB and the other IPAs, are supposed to come up with the SIPP or the Strategic Investment Priorities Plan every 3 years. Now, in the interim, no, the 2020 IPP, which was approved by the President last November 2020, would serve as the interim SIPP. Now, if you look at the list in the 2020 IPP, logistics is part of the preferred activities for investments. And under the specific guidelines of the BOI for 2020 IPP, cold storage is also part of those that would qualify for incentives. Next slide. Okay, so export activities also part, and also special laws like renewable energy, tourism, and so on. Mining would also be still part of the investment priorities plan. Okay, so you will notice that the 2020 IPP does not yet identify what kind of activities would fall under tiers 1, 2, and 3. No? Uh, According to the BOI, in the meantime, if your activity will fall under the 2020 IPP, you may qualify if you have new investments as tier 1 first, no? Temporarily tier 1. And then they estimate that they will be able to come up with the SIPP by the fourth quarter of this year or by early next year. And say for example, you registered a new project, let's say under the 2020 IPP, and so it qualifies temporarily as tier 1, and let's say it's high tech, no, or something, no, and under the SIPP later on it will qualify as tier 3, no. It will, they say that next year once the SIPP comes out, it may qualify or it may be upgraded into tier 3. So which I will discuss later, the impact of such an upgrade in terms of incentives. Right. So the next question would be, who approves the project or who approves the grant of incentives? Next slide. Okay, so it depends on your investment capital. So what is investment capital? Unfortunately, the initial definition was vetoed, but don't worry, there is a definition in the implementing rules and regulations. So investment capital is just your project cost. So this means your amount of investment, which includes your working capital. It now also includes the value of the land, the assets, no, that you will put up in terms of your new investment. So if it exceeds 1 billion, the granting authority shall be the Fiscal Incentives Review Board, which is chaired by the Department of Finance Secretary. If it does not exceed 1 billion, it shall be approved by the Investment Promotion Agency, such as the BOI, as delegated by the FIRB. Now, this amount of threshold, which is 1 billion, may be increased, no, by the FIRB at a later point in time. Now, in the original bill, there was an original attempt, no, to um, add a provision that an application for tax incentive shall be deemed approved if not acted upon within 20 days from complete submission of documents. This provision was vetoed by the president, saying that granting of incentives is a very important function, which should not be sacrificed for the sake of expediency. Okay. Um, Now, there in the implementing rules and regulations, you also have to be careful because there is a provision for penalties if you attempt to split your activities for registration just so you can avoid going to the FIRB. So there are factors enumerated in the IRR as to how they will determine whether there is splitting of activities. Next slide. So the question is, who is the FIRB? Now, the FIRB is not a new government agency. It was created sometime in 1975, I think, through a presidential decree. No, it's just that under CREATE, it is its functions and powers are very much expanded. No, so the FIRB shall be composed of the DOF secretary and the DTI secretary as co-chair, the DBM Secretary, NEDA, Director General, and ES. There's also a technical committee under the FIRB, which shall be chaired by a DOF Undersecretary, and its members include the BIR Commissioner, the BOC Commissioner, and the IPA Director as applicable. Okay, next slide. Okay, so these are the expanded functions of the FIRB, quite powerful. Basically, it has the policy making and oversight function over all investment promotion agencies, and overall registered business enterprises under the CREATE law. It also has the power to, of course, approve or disapprove the grant of incentives and cancel, suspend, or withdraw those incentives. Okay, next slide. All right, so now we come to the meat of the discussion. What then are the available tax incentives if you qualify and your activities would also qualify? Next slide. So basically, three types no, of incentives. We have the income tax incentives, the customs duty incentives, and then the VAT incentives. For income tax, there's the 4 to 7 years of income tax holiday. After the income tax holiday period, there is either the 5% special corporate income tax only for export enterprises or enhanced deductions. I'll discuss the details in a bit. No? And then the customs duty incentives, customs duty exemption for importation of capital equipment, raw materials, spare parts, and accessories. And then for VAT, there's also VAT exemption on importation and VAT zero rating on local purchases. Now, I understand there is a commotion now with regard to VAT incentives. I will also discuss this in a bit. Okay, next slide. All right, so let's start with income tax incentives, starting with the period of income tax holiday. So I mentioned 4 to 7 years. Now, how do you know how long of income tax holiday you can enjoy? So the first question would be, where will your project be located? So the CREATE law divides the Philippines into three parts. No? We have the National Capital Region, NCR. Then we have the metropolitan areas, which includes Metro Cebu and Metro Davao, or areas contiguous or adjacent to NCR. So you know the NCR plus bubble, right? So this is the plus, the adjacent areas to NCR. And then the third, of course, all other areas that is not in number 1 and number 2. So you will notice here, no, the farther you are from the NCR, the longer your income tax holiday period. Okay, that's number 1. And this is consistent with the Balik Probinsya Bagong Pag-asa program of the government to incentivize investments or projects outside the metropolitan. Okay. The next question to ask would be, what would be your industry tier? So we've discussed industry tiers earlier, meaning the more high-tech, no, the higher the industry tier. And you will notice here that the higher the industry tier, the longer the income tax holiday period. Now you combine the two, the location and the industry tier, then you can determine how long of income tax holiday you can enjoy. So for example, you will put up a cold storage cold storage facility in, let's say, Metro Cebu. I am biased because I'm from Cebu. So you are under the second location category. And just for conservatism, let's say you will qualify under tier 1, then you may qualify for income tax holiday of 5 years, right? Now, there are also two additional provisions on income tax holiday where you may be granted additional 2 years of income tax holiday if you locate in an area recovering from armed conflict or major disaster as determined by the Office of the President. And then there's also additional 3 years of income tax holiday if you originally locate in the NCR and then you completely relocate your project outside of the NCR. So again, it's consistent with incentivizing investments in less developed areas. Next slide. All right, so we've talked about the 4 to 7 years. It applies to both export and domestic enterprises. Now, after the ITH period, this is where it differs. No? As a in your industry, most likely you will be domestic market, right? So for domestic market enterprise, unfortunately, after the income tax holiday, there will only be the 5 years of enhanced deductions. Now, this is a very new incentive for you because prior to CREATE, domestic enterprises only has the 4 years of income tax holiday. I will no longer discuss much on the special corporate income tax because as a domestic market enterprise, it's not available to you. No, it was originally attempted to be available, but it was vetoed by the president, saying that these domestic market enterprises are actually market seeking, and with or without incentives, they would have the market. No, but still good news. You still have the 5 years of the enhanced deductions, which I will discuss in detail later on. Now, if you have expansion projects, no, you can also avail of additional incentives for the expansion, subject to the qualification under the SIPP and performance review by the FIRB. You can also, of course, avail of new incentives for new projects. No? Now, in the IRR, implementing rules and regulations, there is a mention of 3-year income tax holiday for expansion projects, which is weird because it's not in the law itself. But you can see the 3-year income tax holiday in the implementing rules. And then the law also provides that, of course, the period of availment of incentives will start from actual start of commercial operations, but the start of commercial operation should be within 3 years from date of registration. Now, this was not in the previous rules, no, because in the past, as long as you're registered, you are given the flexibility as to when you intend to start commercial operations to give you time for the construction, training, and so on. But this time, it should be within 3 years from registration. Next slide. All right. So before we go to our break, I will just discuss very briefly the special corporate income tax. But this is, again, only available to export enterprises who export at least 70%. No? I'm not sure, but if maybe you have members or we have attendees here who would qualify for indirect export, meaning they sell their services to other export enterprises and they have at least 70% of those indirect export, then they may qualify for this. Now, the special corporate income tax rate is very similar to the GIT, no, or the gross income tax, but they renamed it to distinguish it from those that would continue to enjoy the 5% GIT as part of their transitory provisions. So the SIT is still 5%. It is still based on gross income, and it's still in lieu of all national and local taxes. But this time, it is time-bound. No? It's only for 10 years after the income tax holiday for export enterprises. And the sharing will continue to be 3% to the BIR, our national government, and 2% to the local government where you are located. Next slide. Now, in the IRR, in terms of what are the deductible direct costs for purposes of computing SCIT, unfortunately, the IRR, which was published last June 23 in the official gazette, it is now an exclusive list. No? It provides that only the following shall be deductible as direct cost in computing the 5% SCIT. So if you look at this list, this basically just combines the list of deductible direct costs that are in the existing lists or regulations of the BIR, no, and the different government agencies. Okay, so we will have a short break. I understand from CCAP, no, and then we will proceed with the enhanced deductions and the other discussions after the break. Thank you.
Thank you, Attorney Cheryl. And yes, we will have a short break, but don't leave the presentations, or don't leave the session yet, because Attorney Cheryl will be coming back after a presentation from one of our sponsors. And we'd like to call on Miss Maxine Abigail Perez from Aboitiz Power, and she will be the one to introduce the speakers for the next presentation.
Okay, so hi, good morning, everyone. I'm Abby Perez. I will be giving a brief intro about Aboitiz, and then I will hand it over to my colleagues. So I'm just going to share my screen. There. Can everyone see it?
Yes, 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 Abby, your screen is
Okay. 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 Thank you. So again, good morning. This will just be my part will just be very brief. I'm going to talk about the different REST licenses of Aboitiz Power. So currently, Aboitiz Power has three. We have Aboitiz Energy Solutions, Advent Energy, and Prism Energy. So the difference only is Prism Energy mainly caters to the Visayas region, wherein AC and Advent caters to our Luzon customers. So with more than 300 customers in our roster, we have proceeded to offering not just our REST services, but we also have value added services. So my three colleagues who will be presenting after me will be discussing more of these. The first one will be, hold on, sorry. The first one will be Jeff. He will be discussing the current forecast for the cold storage industry. He is our market strategy manager for Aboitiz Power, and he supports the group by developing its market intelligence capabilities to maximize contracting opportunities in the retail market through data science and analytics. He also manages the development of various financial and technical product offerings to create value for prospective and existing retail customers. So, Jeff, are you here?
Thanks, Abby. Good morning, everyone. So next slide, please. Our conversations with our customers inspired us to continuously seek out opportunities that create value to their business. And one of their most asked questions was, how is everyone else in our industry doing? So our customers are interested to understand how they're performing against the whole industry in terms of energy consumption. So this morning, for the first part of our presentation, I'm here to give you an overview of what happened, or should I say, the trends in the energy consumption of your industry in 2020. Now, to do that, we will be assuming that higher electricity consumption translates into higher productivity. We all know that electricity plays a crucial role in the operations of a business. Actually, there are numerous studies showing the positive relationship between electricity consumption and productivity, and one of which is flashed on your screen right now. It's a study conducted in Taiwan in 2016, which claims that for every 1% increase in electricity consumption, productivity grows by 1.7%. So next slide, please. Next slide, please. Thank you. So another thing to note is that the ECQ this year is more comparable to last year's MECQ, in that the guidelines that we have for ECQ this year is a little bit more lax and closer to the restrictions of MECQ in 2020. We then assume to expect that the worst case scenario, barring a complete economic shutdown, would be similar to the trends in or scenario during the MECQ period in 2020. So next slide. Thank you. So what this graph shows you is the difference between your 2020 consumption, the solid colorful line, and our pre-pandemic benchmark, which is your 2019 consumption, which is a dotted gray line. So the solid line shows you how far the weekly 2020 consumption of the industry was from the weekly 2019 consumption. So the colors signify the regulatory restriction. So red for ECQ, orange for MECQ, and green for GCQ. You can see on the slide, the average performance for the industry was at around 18% below the pre-pandemic level, despite an increase in the demand for perishable ready-to-cook or eat products, the industry was hampered by supply troubles from other countries for the meat processing industry, one of your main customers. And aside from the fact that prices have increased by more than 30%, raw materials coming from countries in North America and Brazil were limited, and the supply from Europe, which is around 70% of our total supply here in the Philippines, became unavailable due to the avian influenza concerns. The fact that one of your biggest customers was only able to fulfill 60 to 80% of their orders affected the operations of most cold storage facilities. But on a positive note, the higher points of this 2020 consumption came in the week of June 21, as restaurants across the country started offering frozen, ready-to-eat, and ready-to-cook food as a way to curb their losses. So next slide, please. Thank you. So in terms of the average consumption shrinkage across industries, the cold storage and ice plant industry was at top 8 with a shrinkage of at least 18%. And should another ECQ happen in 2021, the worst case based on 2020 MECQ data would be also around 18% below the baseline. Next slide. Thank you. So I'd like to end my part with a quick overview of how the industry is performing this year. So good news, the figures show that the cold storage and ice plant industry has already exceeded its 2019 consumption by an average of 110%. And aside from a dip in weeks 13 and 14, that can be attributed to the reinstatement of ECQ in the Philippines. The industry has been consuming more than their benchmark consumption. This is, of course, in line with the demands of the pharmaceutical companies, most especially vaccines that require constant refrigeration and temperature control. So what we've shown you is just a snapshot of the impact of the pandemic to your industry. If you're interested in comparing your company's energy usage versus the industry, please don't hesitate to reach out to us in Aboitiz. In Aboitiz Power, we want to continue exploring solutions that would benefit your business the most and enhance your experience with us. With this, I now turn you over to Engineer Gerald Casipit, our Customer Solutions Supervisor, for the discussion of the latest innovations addressing your concerns.
Yep. As part of our technical support, we are providing energy solutions to our customers. Energy solutions that address your pain points that relate to power, energy consumption, energy efficiency, and projects that will make your system reliable and resilient. Next slide, please. Our energy solutions are tied to our equipment financing program. So if you don't have the capital to acquire the equipment, or if you do have the budget but you want to reallocate it to other projects that can directly impact your business operations or expansion, we can provide an alternative source of capital to acquire business critical assets and equipment. These are just some of the solutions that we can provide. We are providing hybrid energy solutions for business critical operations or equipment that require clean power. This solution can also address power quality issues that are inherited to your systems like harmonics, imbalances, and the likes. Smart metering or Internet of Things. Our cloud-to-cloud based solution will help you monitor your consumption trend, peak demand, and other power quality data in real time. This can be viewed through a dashboard whether you are offsite or on-site. So if you are offsite, you can also view the dashboard on your mobile phones. Related to smart metering, of course, is the energy management solutions. With the smart meters in place, you can easily set up your energy management framework. Next slide. So for hybrid energy solutions, we integrate renewable power source, genset, and power conditioning equipment. Next slide. So example topology for no outage solutions, optimizing renewable power source, providing clean power and seamless transition from grid to genset or from genset to grid. Next slide. So for smart metering, It is now possible to act immediately when an anomaly is detected through real-time data analytics. This will help you understand the behavior of your consumption trending on various scales, whether hourly, weekly, or daily, or every 15 minutes. You can also track your peak demand and identify the top demand offender. This one will help you understand which equipment are contributing to your peak demand and which are unnecessary. It can also help you monitor and identify areas of abnormal energy loss. This can help you comply easily to the Republic Act 11285, since 6 out of 9 obligations can be met easily if you have smart meters in place in your facility. Next slide. So this is just an example of data that you can view in the dashboard. So you can download this data for your reports and analysis. Okay, next slide for my last slide. Okay, I'd like to highlight that we are providing customized solutions that can address your specific needs, like the online prediction condition monitoring for your business critical assets like transformers and motors. So if you need the power transformer for your expansion needs and other customer solutions, please do let us know. Abby?
AK, are you here?
Hi,
Yeah, Abby.
Conrad will be the one to present.
Oh, sorry, sir. Okay. So our next speaker will be Mr. Conrad Maniebo. He joined Aboitiz Power as the lead engineer of its distributed energy resource business unit on January of 2017. So Conrad is responsible for the development of technical expertise within the group in the field of DERs, including but not limited to rooftop solar systems. He also leads the engineering, execution, and operations related to the development of rooftop solar opportunities to increase AT's renewable energy capacity. So, Conrad?
Morning, everyone. I hope my audio is clear since I'm wearing a mask today. We are APX, Aboitiz Power's business unit handling distributed energy resource solutions, an example of which is rooftop solar, a relatively new business unit in the corporation with more than 100 years of experience in the power industry. APX is geared towards supporting our group's 50-50 target balance mixed energy portfolio by the year 2030 and helping create better solutions for customers to meet their energy requirements through secure and long-term partnerships. Next slide, please. Although experience tells us that rooftop solar alone cannot satisfy your 24/7 energy requirement, it can provide an alternative green energy source that can also generate savings from your overall power consumption. We believe in the technology, reason for us to adopt the solution on our own facilities, as seen in the photo in your screen. Next slide. So we do have two commercial offerings, PV system sale and power purchase agreement. Let me focus on the PPA. It will provide a secure and long-term partnership between Aboitiz Power and the customer, and will open up other power-related services that may arise in the future, like advanced DERs or, as mentioned earlier, value-added services. It also provides an opportunity to have a solar facility without any capital expenditure and without worrying about O&M. Next slide, please. AP started its venture in solar development back in 2016 through Sakasan, a 59 megawatt peak solar farm in San Carlos, Negros Occidental. We now have a 74 megawatt solar farm under development in Pangasinan, and we hope to start construction in the second half of 2021, with commercial operations targeted by the year 2022 quarter 4. Next slide. APX is also supported by everything that comes with a big power company such as Aboitiz Power, like the balance sheet, supply chain, and an experienced energy regulatory team. This would end our team presentation, and we will be glad to answer any questions either during the Q&A segment of this session, or you can choose to reach us individually through our contact info. Thank you very much.
Thank you very much, Aboitis Power. Thank you, Ms. Maxine Abigail Perez, Mr. Jeffrey Masitas, Engineer Gerald Casipit, Engineer Conrad Maniebo. Thank you very much for your presentation. I think there are some questions in the chat box, but we will try to vet it and send to you the questions directed to Aboitis Power. Okay, ladies and gentlemen, please join me in welcoming back Attorney Cheryl Ong for the second part of her presentation this morning. Attorney Cheryl.
Thanks, Mark. Um, okay, so let's proceed to discuss the types of enhanced deductions, or what are those expenses that we can claim more than 100% of as part of the incentives. No? So as a domestic market enterprise, after the 4 to 7 years of income tax holiday, you can enjoy 5 years of enhanced deductions. So this is the list of those enhanced deductions. No? So we will discuss them in detail. Next slide, please. So the first one is the additional depreciation allowance of 10% for buildings and 20% for machineries and equipment. Note that this is limited only to assets that are directly related to the registered activity. So this excludes assets for administrative and support services. Then the second one would be direct labor expense. So you can deduct 150% of your direct labor wage and benefits, provided this is also limited to those directly related to your registered activity. So therefore, it excludes managerial, admin, and indirect labor and support services. The next would be research and development cost. So you can deduct 200% of your research and development cost, provided it's limited to local expenditure and salaries of Filipino employees and consumables, and payments to local research and development organizations. Now, research and development is very much incentivized because in our neighbor countries, they have special incentives for research and development activities. Next slide. Training expense also 200%, no, or an additional 100%, provided it also only applies to trainings that are directly related. So this excludes mga trainings like onboarding, leadership trainings, or um, team building trainings. No, the training should be directly related to the registered activity or technical trainings. Also, it's limited to trainings given to Filipino employees. No, this is because we want the a transfer of know-how or to improve the skill set of our Filipino labor force. And then next would be the domestic inputs purchased. There's an additional 50% deduction, but again, this is limited to those directly and exclusively used in the registered activity. So this includes raw materials or direct services related to the registered activity. And then power expense. So it was just mentioned earlier that I suppose this is one of your major cost components, no? The if you avail of the enhanced deductions, you can deduct 150% of the power cost directly related to your registered activity. Okay, next slide. For manufacturing industry, there's a reinvestment allowance, but I suppose this is not applicable to you. And then if you avail of the enhanced deductions, you can also avail of the so-called enhanced net operating loss carryover, or the NOLCO. So the losses that you incur for the first 3 years, you can carry it over for 5 years instead of the normal 3-year period. Next slide. Okay, so you have to remember that under enhanced deductions, you will be subject to the regular corporate income tax rate, no? So let's assume your regular corporate income tax rate will be 25%, also under Create. It's just that you can deduct additional deductions. And take note that unlike the special corporate income tax, uh, under enhanced deductions, this is not in lieu of all national and local taxes. This means that you will still be subject to the local business taxes and the real property taxes. All right, now let's proceed to customs duty incentives. So there is a duty exemption for importation of capital equipment, raw mats, spare parts, and accessories to the extent directly and exclusively used in the registered activity, part of direct cost, and not produced or manufactured locally. Now, subject to the prior approval of the BOI. I will discuss in a bit. I understand some of you are having some issues with this. There is a separate discussion under the transitory provisions. Next slide. Okay, so we are in the controversial portion of the Create. So let's start with the provision of the law. No? So the Create law says that there is VAT exemption on importation and VAT zero rating on local purchases to the extent of goods and services directly and exclusively used in the registered activity. Okay, so it's very clear that if the local purchases are directly and exclusively used in the registered activity, it shall be zero rated. Now the question is, how do you define or what do you mean by directly and exclusively used? And what document will the registered business enterprise give to its suppliers so that the suppliers will know whether to pass on the VAT or not? So up to now, it's not very clear yet, no, but I will discuss what has been happening in the past few weeks. Next slide. Okay, so the BIR, I think in June 12 or yeah, June 12 issued this revenue regulation 9-2021. So it is causing a lot of confusion because under this revenue regulation, no, it enumerates supposedly those transactions that will no longer be zero rated. And this includes, if you look at item 5, those export sales under EO 226, otherwise known as the Omnibus Code of 1987, and other special laws. No, um, if we go back, no, in history, under the train law, these are the same transactions that were enumerated that will be subject to 12% VAT, provided that the government meets two conditions. The first condition was that they come up with the enhanced VAT refund system or a 90-day period for the government to process claims for VAT refund. And the second condition was that the government must refund in cash all pending claims for refund as of December 31, 2017 by December 31, 2019. Now, without explicitly saying that these conditions were met, no, the BIR issued this RR as if saying that those conditions were met and therefore these transactions now become subject to 12% VAT. Now, in the IRR of Create on incentives, unfortunately, these same enumerated transactions, and in fact, the RR9 was referred to, no, in the RR of IRR of Create, saying that yes, up to the extent directly and exclusively used, zero rated, but the following shall be vatable. And saying that if you are a vatable VAT registered business enterprise, you may claim for the input VAT refund. No. Now I think from a legal perspective, no, there is an inconsistency and the Create law should prevail. Insofar as those directly and exclusively used in the registered activity, I think it should still be zero rated. However, from a practical perspective, until and unless someone goes to court or this regulation is revised, revoked, or suspended, no, you would understand that the suppliers would take the conservative position to start passing on VAT to their BOI and PESA registered customers because the risk is on the part of the supplier. Now, from a practical perspective, pending any clarification from the BIR and the DOF on this inconsistency, you may want to discuss commercially with your suppliers or with your customers, no, as the case may be, to try and defer, issuances of invoices and receipts until such time that this is clarified. I don't know when, but I understand that the government or the BIR is drafting a clarification on this, and I also cannot tell yet. I'm not sure what the clarifications will look like. So I'm just trying to say that to avoid any further confusion, no, because my worry is that okay, if you start passing on VAT this week, because this became effective last Monday, yesterday or Sunday, um, and you start passing on VAT, and the next week they'll clarify that okay, to the extent directly and exclusively, it's still zero rated. You may also have an issue on what to do with the VAT already passed on for 1 week. So that's where we are. It's still a bit confusing, no? But I understand that suppliers have started writing to their PESA customers that they will start passing on VAT this week. But I do think that from a legal perspective, to the extent directly and exclusively used, it should still be zero rated under the CREATE law. I also understand that the different industry organizations like the semiconductors, even PESA itself has written to the Department of Finance on this inconsistency and clarification. Next slide. So for the sale of services, there's also this enumeration that would make these particular activities or transactions already subject to VAT. Next slide. Okay, so we also have the so-called flexible or discretionary set of incentives. In other countries or in our neighboring countries, this is quite popular, no? They actually have subsidies or other types of investments other than tax incentives, I mean, no? Other than tax incentives. Now, to be competitive, the law also provides for these so-called modified set of incentives where the president may modify the mixed period and manner of availment of incentives or craft appropriate financial support package for highly desirable projects. No? And this could include use of government resources such as land use, water appropriation, power provision, budgetary support, and so on. No? Provided that there is a comprehensive sustainable development plan and there is a minimum investment capital of 50 billion pesos or a minimum direct local employment generation of at least 10,000 within 3 years. No? So if these are met, the president can grant up to 8 years of income tax holiday. And then after that, the special corporate income tax rate for the remaining years or up to a maximum period of 40 years. So I suppose this would include infrastructure projects, no, if these conditions are met. Next slide, please. All right, so we go to the transitory provisions. This applies to those already registered prior to effectivity of CREATE or those registered with the BOI, PESA, or enjoying incentives under these investment promotion agencies prior to April 11. Next slide. Okay, so the transitory provisions, so if you are previously registered and you were granted income tax holiday, you will be allowed to finish your remaining income tax holiday period as provided in your registration agreement. Now, even if you have not yet started commercial operations on April 11 or after, you will still continue to enjoy the income tax holiday as indicated in your registration agreement. That's for item A. No? Let us skip first item B. Let's go to item C. No? If you are currently registered or registered prior to create, you are availing of the 5% gross income tax or GIT. So this is usually for PEZA companies. You will continue to enjoy the 5% GIT for 10 more years. So this is the so-called sunset provision where you are given a 10-year transitory period. If you are under letter B, so this was the initial confusion, if you have ITH and thereafter the 5% GIT, you're also given the 10-year transition. And later on in the revenue regulation, it was clarified that, for example, you have 2 more years of income tax holiday and thereafter the 5% GIT. You can enjoy the 2 years of ITH and then 8 more years of the GIT, or a total of 10 years transition. Okay. Now, if you are an export enterprise registered prior to create, you have the option to reapply and avail of the incentives under create, which is the 10 more years of the SCIT, subject to the conditions and qualifications under the SIPP and the performance review by the FIRB. Now, I assume that there are not much export enterprises here, no, unless you are an indirect exporter. So these are the transitory provisions insofar as the income tax incentives are concerned. Next slide. So as I mentioned, in the IRR on incentives, if you are under item B, this one is the applicable provision. So again, if you have 2 more years of ITH and then GIT thereafter, you have 8 more years to enjoy the GIT, or a total of 10 years to transition. Next slide. Okay. All right, so this is another controversial provision, no, under the IRR on create. So the IRR was issued or published last June 23, and it says it's effective immediately. No? Now, in terms of duty exemption for your importations of equipment, capital equipment, etc., the IIR says that if you were registered prior to create uh, and you enjoy duty exemption, your duty exemption is until the expiration of certificate of authority to import, if already issued, or pending applications prior to the IRR, or until the expiration of the transitory period. So if you are availing of the income tax holiday and you will continue your income tax holiday based on your registration agreement, it seems that the duty exemption will be coterminous with your income tax holiday transitory period. So this is how the IRR looks like as of now. No? Then secondly, it also provides the same enumeration of those transactions under RR9 that will already be subject to the 12% VAT. So the discussion that I had earlier on the confusion under Revenue Regulation 9 will also apply to existing registered uh, activities prior to create. No? Now, it's not explicit, but my understanding from the DOF and the BIR is that uh, after the transitory period, even the indirect tax incentives like the duty exemption and the VAT exemptions would also be time bound. So it will be coterminous with either the transitory provisions uh, or the number of years granted for the income tax incentives. However, again, from a legal perspective, I don't think that was the intention of the Congress when they passed this law. No, the concept of cross-border doctrine for indirect tax purposes, that's the duties and the VAT, no, should is not explicitly mentioned in the law itself as time bound. So that is another concern, although you still have time to discuss that because you still have the remaining years of income tax holiday. Next slide. All right. So for any existing registered activities, no, the IRR for the incentives part provides that you have the option to register and avail of incentives under Create, which I have discussed earlier for new investments, no? So similar to new investments, provided that you surrender your certificate of registration or certificate of tax incentives. So this presupposes that, for example, you have new investments or you will surrender your certificate of registration and waive your rights under the transitory provisions, that you may avail of new incentives if you qualify and if you are approved. So you have that option. Okay. Okay, next slide. So we have the post-repertorial obligations of registered enterprises. Now, this applies both to new and existing registered activities. No, this is the portion where the incentives or the grant of incentives must be transparent and performance-based. No, this is because the government would like to do a cost-benefit analysis of the granting of tax incentives. Next slide. So we have first is that if you are a registered business enterprise, you have to file your returns electronically. So tax returns must be filed and paid through the EFPS system of the BIR. Second, you have to submit annual tax incentives reports containing this information. Okay, next. There is also, next slide, please. There's also the annual benefits report within 30 days from filing of tax returns, indicating your investments. No, so basically these are the benefits that you have provided to the economy, job created, and so on and so forth. Taxes paid. No, next slide. Next slide. Now, if you fail to comply with the reportorial requirements, these are the penalties. So the first violation is 100,000, second violation 500,000, third violation can be cancellation of your registration. So they take this very seriously because they would like to be able to quantify if it is still worth granting these tax incentives to investors. Next slide, please. Now, in case of material misrepresentation, meaning that you represent that you will be doing this or doing that to be able to avail of more incentives, then these are the penalties. Could be cancellation, suspension, or you can be required to refund the incentives enjoyed, including interest and monetary penalties. Next slide. Okay, so this is just to summarize some of the vetoed messages of the president. Next slide. So it's just one slide. On the incentives part, no, we mentioned that the definition of investment capital is vetoed because originally it did not include the value of land and working capital, and they don't want to underestimate the value of the investments. And then the special corporate income tax for domestic corporations was also vetoed, as I mentioned earlier. And then allowing existing export enterprises to reapply, because originally there could be a maximum of 30 years for export enterprises. No? So there's a 10-year transition, reapplication for another 10 years, and then another 10 years. The third 10th year was vetoed. So now it will only be total of 20 years maximum for export enterprises. And then limitation on power of the FIRB, as I mentioned, right now the FIRB power oversight function covers all RBEs and all IPAs. And then, as I mentioned, specific industries were also vetoed to be more flexible. And then originally there was a power of the president to exempt any IPA. It was also vetoed because it is said to be a highly political tool. And then, as I mentioned earlier, the automatic approval of applications for incentives was also vetoed because it's an important function that cannot be sacrificed for the sake of expediency. Next slide. Okay, so what would be the next steps to consider insofar as incentives is concerned? First would be to identify strategic locations. So as I mentioned, the farther you are from the NCR and the metropolitan areas, the longer the income tax holiday. And then second, look into the industries to maximize incentives in terms of the industry tiers. No, we will know about this once the SIPP will come out. And then third, to have an optimization study if it is worth availing of these incentives if you qualify. So you can do some pencil pushing in terms of the costs and benefits. Next slide. Okay, so we proceed very briefly to some of the salient provisions of the proposed amendments to the Public Service Act. Now, this is a Senate Bill 2097 that is still pending. No, do not confuse yet. No, this is still just for your advanced reference. This is not yet a law. So this is still subject to change and still being deliberated in the Senate. This proposes to amend the Commonwealth Act of 146, which is an 85-year-old law, no, on Public Service Act. Okay, next slide. So the main change here would be okay, under the Constitution, no, if it is a public utility, there is a requirement that it has to be at least 60% Filipino. But the Constitution itself does not define what a public utility means or covers. It is the Commonwealth Act 146, which defines what is a public utility, which was under the CA 146, same as a public service. So this also includes yourselves, no, common carriers, ice plant, and so on and so forth. That's enumerated under the left column. No, what the Senate bill proposes here is to insert a definition of public utility to limit it to these four items, which is only distribution of electricity, transmission of electricity, water pipeline, and sewerage, and other subsequently provided by law. But it reserves the right to include, no, as public utility by NEDA and the Philippine Competition Commission, subject to certain factors as enumerated here. This means that those not in the four items there, no, in the right column, which includes transportation, telco, and so on, will no longer be considered as public utilities and therefore no more foreign ownership restriction if this is passed into law. Okay. This will hopefully increase foreign investments and generate jobs as well, and make prices more competitive as well for the local consumers. Next slide. Another salient difference would be it now removes the certificate of public convenience requirement, no, under the previous law, simply because it's no longer a public utility, and it also devolves the administrative functions, to 17 admin agencies identified. As I mentioned, it removes the foreign ownership limitation, no, as if you are not a public utility. But if you're a public utility, as mentioned earlier, it will still be required at 60% Filipino. Next slide. However, if you've read most of the news articles on this, no, there are some provisions in the Senate bill that some organizations or chambers would want to be revisited during the second and the subsequent readings of the bill. One would be because there is a provision that if it's a foreign government controlled transaction, no, and it's a critical infrastructure, it's not allowed. So there would still be some sort of foreign ownership limitation, no, if it is so-called critical infrastructure. The other is that there is a mention in the Senate bill of reciprocity rules that foreign nationals can own more than 40% of the capital of public services, including transportation, if it's a critical infrastructure, provided that there is also reciprocity rules in that country. Now, they would want this reciprocity rule to be revisited or removed. No. Another would be the employment of foreign nationals. So it says it starts with that foreign nationals may be employed only after determination of non-availability of competent, able, and willing Philippine nationals. But in no case shall the foreign nationals comprise more than 25% of the total employees and must obtain employment permits. So these are some of the controversial items that, although the intention is supposedly to liberalize, no, the foreign investments in this area, there are still some safeguards or some limitations that they would want to be revisited in order to achieve the objective. Okay, so this is where we are last March in terms of Public Service Act. It was passed in first reading, so it's still for second and third reading in the Senate. If you ask me, I don't know in terms of timeline whether there's still time to pass this within this administration. Your guess is as good as mine. It's hard to tell. All right, so I think this ends my presentation, and I see some questions in the chat box. I will turn you back over first to our host, Mark.
Thank you, Attorney Cheryl, for a very interesting, informative, educational. I don't know how to describe it at the moment, but it was actually a handful of information that we need to absorb maybe in the next few days. Okay, for questions, we are now open. We now have the chat box open, and if you have any questions, please feel free to raise your hand or encode your questions in the chat box. Yeah, we have now a few questions here, Attorney Cheryl, and the first one is, are the reduced income tax levels already applicable for business year 2021?
Yes. So for the reduced corporate income tax rates, it's effective July 1, 20, actually July 1, 2020, no? And moving forward. So 2021, it's already applicable for the full year. The 2020 impact was actually half year, and there were some guidance in the regulations as to how to compute for 2020 because it was half year. But for 2021, it will be already full year, the 25% or the 20% if you qualify under the uh, SMM, the small medium enterprise thresholds as discussed earlier.
Thank you, Attorney Cheryl. I think the lineup of questions are all for you. Let's go to the second question. Do we understand correctly that the SCIT is available only for export-oriented enterprises? If yes, does the minimum 70% export still apply to be considered export-oriented?
Yes. So under the CREATE, only export-oriented enterprises may avail of the SCIT. And the definition of export enterprise is at least 70% both direct and indirect export. So as I mentioned, in your industry, I think the only way you can avail of this would be if 70% of your revenues, for example, are also for export enterprises. So you become an indirect exporter. Then possibly you may also avail of this option, the 10 years of the special corporate income tax or the enhanced deductions. And by the way, if you do qualify as an export enterprise, then you have the option between the 10 years of SCIT or the 10 years of enhanced deductions. And the timing of when you have to indicate which option you want to take would be upon application with PEZA, with the PEZA or the BOI, or the IPA. And this option that you take upon application will be an irrevocable option. So you have to do your pencil pushing before you apply as to which one would be more beneficial to you. So we do those simulation exercises, and the thing to remember there is that the 5% SCIT is in lieu of all national and local taxes. So when you compute, you consider also the local business tax, real property taxes, and the other taxes that will be covered by the 5% SCIT. Whereas the enhanced deductions is not in lieu of all national and local taxes.
Okay. And we have another question here for Attorney Cheryl. Please elaborate on the requirement for RBEs to have e-receipting or e-sales documentation as qualification for fiscal incentives.
Okay, so this is actually a bit ironic requirement because there are no details yet as to the e-receipting and e-sales documentation because as I think they just put this in advance in anticipation that by 2022, that is the deadline, no, for the BIR to implement the e-receipting under the train law. So we will know by then what this requirement will look like. But I do understand that the BIR is now, and the DOF, they are now talking to foreign governments or consultants to see how best to implement the e-receipting and e-sales documentation.
Okay. One more question, Attorney Cheryl, and I hope you're still okay with this one.
Yeah, sure.
Okay. What's the stand of PEZA on the inconsistency of RR 9-21 and Create? Did they agree with BIR to subject the sales to 12% VAT?
PEZA does not agree. In fact, PEZA has written a formal letter to the DOF to request for status quo or suspension of the implementation of RR9. No, they do not agree, and they have raised that there is inconsistency between the provisions of the law to the extent directly and exclusively used in the registered activity versus what the RR provides. And they are seeking that the DOF and the BIR should issue a clarification on this matter. So my advice would be think first whether what you are selling is is something that could be considered directly and exclusively used. No, if definitely it's not something that may be considered directly and exclusively used, then you can start passing on VAT because even the law itself says that only those directly and exclusively used. But if you fall under that ambiguity, that inconsistency, that it's possible that what you're selling would be considered directly and exclusively used, then you may try to wait for the clarification as much as you can commercially. No? So hopefully this will be clarified soon. Because, how to determine directly and exclusively is a very subjective thing. No? The way it's written in the IRR is that it has to be indispensable for you to engage in the registered activity. And the examples there are raw materials, no, inventory, and so on. So if you're selling something that's really operating expenses or admin support services, no, then I think there is no doubt there that this already becomes vatable actually upon effectivity of create, even without the revenue regulations. Yeah.
Thank you, Attorney Cheryl. Do we have any questions from the floor? You can address it to either the sponsors or to our main speaker, Attorney Cheryl Ong.
So if you're shy to ask your questions, this is my contact information. You can take a picture of the barcode. Then we'll be happy to assist or to answer your questions.
Okay. Maybe nahihiya pa ng konti ang mga mga kasama natin dito. But before we move forward, we'd like to acknowledge our sponsors again, Bruja Panels, the panels that connect, and Aboitiz Power. We believe in balance. Okay. If there are no other questions for this session, may we call on the Colchian Association of the Philippines President, Mr. Anthony Dizon, to deliver his closing remarks.
Thank you.
Thank you, Attorney Cheryl.
Hello, can you hear me? Hello?
Yes, we can hear you.
Okay, so I think we've had a rather fruitful discussion today. And I'd like to start off by saying thank you to Attorney Che for the informative discussion on the provisions of the CREATE law. There are discernible improvements therein that distinguish it from the Omnibus Incentives Act that could ostensibly motivate new investments in cold chain infrastructure. Although notably, the threshold of 100 million pesos to qualify for the 20% tax rate effectively excludes us. Thank you also on the clarification on proposed legislation on the amendments to the Public Service Act. We hope that the Senate takes due notice of this piece of legislation, as it may actually jumpstart the influx of participation of foreign entities into our industry that may accelerate technology transfer and open new markets for Philippine products. We hope and look forward to further opportunities to avail of free consultation with SGV on matters that affect, influence, or otherwise impact our industry. Thank you to our sponsors for their contribution and participation in today's event. I trust that this interaction will open new business relationships with our members. To our members and all friends of CCAP who joined us today, maraming salamat po sa inyong patuloy na pagsuporta sa CCAP. I share your anticipation that we will soon be able to resume our physical meetings and revive the unique brand of CCAP Fellowship soon. Pag tinulungan tayo ni Atty. Che, baka susunod na meeting natin sa Cebu na lang ulit. On that note, maraming salamat po. Magandang tanghali sa inyong lahat and see you at the next CCAP activity. Thank you.
Thank you, Sir Tony.
Thank you, Che. If I find time to come to Cebu soon, I hope to see you.
Sure, sir. Just give me a call.
Will do. Thank you. Bye-bye.
Thank you.